Hi traders, after a small break, here we are back with our price action training school version 2, session number 15, and we are gonna be talking about Fibonacci IP patterns. This is a proprietary method that has been described in Viktor Pershikov's book. I will mention it later, and I slightly modified it to my liking, but the primary idea is from Viktor Pershikov, so I'm not creator of this trading method, but I fully support it because I think it's very valid and it can be very, very useful. So I'm going to be talking today about this. So before we start, have in mind that on this web address here, you can of course, grab free indicators and tools. I will type it in again in the chat. So here we are. Grab free tools, guys. Sign up for more webinars. And this is it. Okay. So we are back in price action trading school. Okay. So Fibonacci IP patterns. We will be very, very direct with this. So we will talk about 4 IP patterns today, and I will show you the most important things that you should know when you trade IP patterns. First, basics and what are IP patterns. More in-depth insight you can find in the complete guide to comprehensive Fibonacci analysis on Forex. This is a paper book, and you can purchase it on Amazon or maybe other websites. I personally have it. I purchased it, and I think that Mr. Viktor really has the good point regarding these IP patterns. Although, as I said, I slightly modified it, and this can be a good basis for potential counter trend method or system. You will see there is a lot of validity in this method, and basically it's not very hard, but there are some rules that needs to be respected. First of all, let me tell you that IP patterns represent internal retracements. So this is primarily counter trend trading method where price usually wants to reject from some Fibonacci levels, namely 9 and 14, then retest previous levels before moving further to the target. I have found personally that is most effective on higher time frames. So I will recommend it on either 4-hour or at least 1 hour. That is the lowest time frame where you might be searching for internal retracements. 4-hour, however, produced also very, very good results in my back testing. So you might be also looking at 4-hour. This is a very unique way to trade counter trend because, as I said, it used some non-standard Fibonacci's. Where you need to actually be, you can actually make pending orders with it. I will see. I will definitely cut to the chase and explain most important things. So there are 4 IP patterns. We will call them IP1, IP2, IP3, and IP4. IP1 pattern. Okay, now don't be confused. L1 means the first touch of the Fibonacci before price pulls back to L2 and makes an entry. Okay, for IP pattern, L1 is 23.6, L2 is 9, that is your entry. Stop is at 0, target is 50, and win to loss ratio, target to loss ratio is 4.6 to 1. So this is one of the best patterns in terms of risk to reward. So P2L ratio 4.6 to 1. And this is how it looks. I will open the chart right away. Just give me a few seconds. So first, you need to have Fibonacci. Okay, let's use this retracement from this spot to this spot. In order to get 9 and 14.6, you need to go to properties, objects lists, then find your fib, edit, and there type for 9, you type 0.09. For 14.6, you type 0.146. So this is how what you should do in order to get your Fibonacci IP retracements on the chart. You can safely remove other that are not needed. So let's see if I have it all here. Yeah, basically all are here. We don't need more than this. Yeah, I will actually delete 78 and 88 because they are not meant to be traded with IP retracements. And your Fibonacci should look like this. So the first IP pattern is actually pretty clear. The price needs to hit 23.6, then needs to go to 9, okay, and the target is 50. On the chart, it means that the price needs to hit 23.6. You see it was hit here, okay, so it dropped, it was hit here, and it needs to get to 9. Sometimes it's very close to 9, like this. You see it was only 20 pips away from 9, but it doesn't matter. If you see that the price is really struggling to hit the exact 9, then you can enter a little bit earlier, as always, with smaller lot size, but you can add if the price actually gets there a little bit later. So here you can see the price dropped to 23.6 and then retested 9, and it reached the target of 50. So similar thing can be found on all other IP patterns, but for IP1, it's important that the price gets to 23.6. Okay, it retests it. Okay, here is 23.6. It gets to 9. Okay, almost this candle. You see this candle almost hit both this one, and it rejects from 9 and goes down. So it's now, you know, it's like we are not cherry picking anything, but you can easily find it on your chart. So price gets to 23.6. Okay, this could be easily like it's only 15 pips away, and then retest the 9, so it can hit 23.6, retest the 9, and then get towards 50. So you see, those are pretty much very clear points for IP retracements, but sometimes you will definitely need to wait, especially if you trade on higher time frames. You need to wait for the price to develop. What I do usually, I pick previous swings, highs and lows, in order to find these retracements. Okay, here it is, guys, perfect IP retracement, number 1. Okay, so the price went to its high, it went to retest 23.6, this is 23.6, then it went to 9, and then it dropped towards 50. Very often you will find that the price does not reach the exact 50, but then if you want to protect your target, as soon as the price rejects from 9, it will go to 23.6 most of the time. Try to protect your trade by scaling out at 38.2 and leave the full price projection at 50. Stop loss on 4-hour time frame should go 10 pips above previous swing high. On 1-hour time frame, it should go 5 pips, of course, include the spread always, above the previous swing high. Similar for long trades, guys. I won't be repeating. It's actually the same. For IP retracement, number 1, L1 is 23.6, L2 entry is 9, stop it's at 0, target is 50, and PL ratio is 4.6 to 1. So this is profit to loss ratio, or I usually call it risk to reward, because for this you are entering really high and you are targeting 50. There is a deeper retracement. So this is IP number 1. IP pattern 2 is price retraces to 38.2, then it goes to 14.6. That is your entry. Stop is 0. 61.8 is target. Profit to loss is 3.3 to 1. PL ratio 3.3 to 1. This is how it looks on the chart. So we need to find the retracement that goes to 38.2, then rejects. Guys, this is counter trend trading. Have in mind, this is not trend trading, counter trend trading. I will try to find some, let's say, deeper retracement here. Okay, deeper retracement, just to show you. Yeah, you see here, guys, the price went to 38.2. This is it. The price went to 38.2. Okay, it rejected very close to 14.6. So ideally, the price should hit this level, then rejects to 14.6, and then gets to 61.8. So you can find a lot of these examples if you also chart it yourself. So see here again, price rejected from 23.6 and 9, So this was your 23.6 and 9. This was your IP1. Then it went to 38.2, rejected from 14.6. This is IP2, and it went to 61.8. So it's always important that you mark these Fibonacci patterns on your chart. Let's see if we can find more of these patterns. Sometimes it will be, yeah, this is, okay, we will use bigger swing. Yeah, now we have IP4 here, not IP3. I'm trying to search for it. Yeah, usually this is IP4. Yeah, okay, I'm trying to search for it. Okay, still, this is the logic, guys. Price goes to 38.2, rejects to 14.6, and gets to 61.8. Let's see if we can find, I mean, this is like you will always find something, any of those 4 IP patterns. So here, guys, you see the price went here. I didn't actually reject it quite away. Yeah, it was like a bit. Okay, let's see if we can actually move this a little bit. Yeah, we don't have anything here, basically. Let's see if we have somewhere here. Let's go scan together. So it's pretty much very, yeah, here we have. Price went to 38.2. So it first it made a swing, of course, then retracement to 38.2, hit 14.6, and then went to the target 61.8. So this is a very good example of IP pattern number 2. So price went to 38.2 here. Then you wait for a retracement to 14.6, and then 61.8 was hit. So this is IP number 2. If anything is not clear, guys, feel free to ask. I mean, this is pretty straightforward. IP3, price retraces to 50, hits 23.6. Again, target is 61.8. P to L ratio is 1.6 to 1. Okay, so it needs to get to 50. Then it needs to, let's see, I'm doing this, I mean, by my naked eye, I'm trying to search for it. So this is a little bit deeper retracement, guys. And then, okay, let's see if we can find it. So from, okay, so basically this is a little bit, okay, we don't have anything here. Okay, not, okay. Yeah, we don't have anything here. But yeah, if I don't find any example, I will do it just by my hand here. So let's say, guys, okay, let's say, for example, I will do it this way now. Let's say that the price went here. Okay. Okay, I will move it like this. You see. So the price, for example, the high was here. Don't look at candles now. It's not important. It's important that you imagine that the high was here. Price went here. Then it went to 1550. Okay, went to 23.6 and start rejecting. And you see what happened. It went to a little bit lower and then almost hit stop loss, but then it proceeded further down. I will remove this one. Yeah, okay, I will actually leave this one. Remove this one. So again, price went to, after it made a high, it went to 50. Then it hit 23.6. You put your stop loss 10 pips above the high. And then after some time, okay, it started to reject here from 23.6. It started to reject, and you see it hit the target again, 61.8. Yes, Ali, 9 is 38.2 of 23.6, 14.6 is 38.2 of 38.2. And actually, the good thing is that price respects these levels, guys. You will often find that price really respects these levels. So you see here, again, imagine that the high was here, price dropped to 50, then it went to 23.6, your entry is here, stop is there, and it dropped to target 61.8. pretty much very nice example. And one more example, guys. It's IP pattern 4. Okay, retracement goes to 61.8, then the price gets back to 14.6. That is your entry. Stop is 0, target is 61.8, and price actually, sorry, profit to loss ratio PROAL is 3.3 to 1. So nice risk to reward also on this pattern, and this is how it looks. Just for an example, guys, I will use again similar example, so we don't need to search for anything, just for an example. Okay, for an example, yeah, let's use this. Price went to 61.8. okay, then it hit 14.6. it needs to reject. Okay, this would have been a loss, but it doesn't matter. You see how the price is respected here, 14.6, and your target would be here if the price actually went to the upside. But actually this is not bad, because straight from 14.6, guys, the price made 155 pips before it dropped. We can find, let's say, one more example. Okay, just as an example. For example, we have a swing here. The price hit 61.8, then it went to 14.6, rejected to the upside. So now, guys, it's important that you understand the logic. You can try to find for these trades and setups yourself, but it's very important that you understand the logic of these IP retracements, because in my opinion, all of these IP retracements could be very useful for a counter trend trading method. And again, this is from Viktor Pershikov. I modified it a little bit to trade only on higher time frames, but I also might be using this information for my future Camarilla counter trend template that I'm going to test. I'm mostly trading my trend template MTF, but I might use this information for counter trend trading because I find it a bit valid. Again, guys, for a deeper understanding of these IP patterns, you can actually buy this book, The Complete Guide to Comprehensive Fibonacci Analysis of Forex by Viktor Pershikov. In my opinion, this is a good book. You can find a lot of useful information here. I hope, guys, that you enjoyed. This webinar is recorded, will be uploaded to YouTube channel. If anything is not clear, just feel free to ask me. As I'm saying, this will be probably used for my counter trend template, future counter trend template that I will also use for my live trading with my ECS live channel and my live webinars with FXDD. I don't see any questions. Okay, so I guess everything is clear. I wish you guys a great trading day. We are getting back into trading. Subscribe to Price Action Trading School. We'll talk to you soon, guys. As always, cheers and trade safe.